One of the biggest problems today is that most people, they're reacting emotionally to financial news instead of objectively. Every headline wants your attention. Every network wants your fear. Every opinion wants your agreement. But the economy doesn't run on emotion. It runs on data, behavior, incentives, and historical patterns. So in this show, we're going to cut through the noise and we're going to focus on the facts so you can make informed decisions for yourself. Let's dive in. Now, as of this week, one of the most anticipated companies in the world appears to be moving closer to going public. You've probably heard about this, SpaceX. For years, investors have been asking the same question about this. When is SpaceX finally going to go public? Well, according to recent filings and the reports, the answer may be getting a lot closer than it was. But here are the things that you need to understand. The story isn't really about SpaceX. The story is about something much bigger, because SpaceX isn't alone. OpenAI and Anthropic, some of the largest private companies ever created, are reaching valuations that rival some of the biggest publicly traded companies on Earth. What exactly is happening here? Why are these companies staying private for longer? Why are giant IPOs suddenly back in the headlines? And what can history teach us about all of this? And what does all of this mean? Today, what we're going to do is we're going to look at major shifts that are happening in the capital markets and what most people haven't even noticed. So let's dive in. Today, we're going to cover 4 things. First, what an IPO actually is and why companies use them. Second, why companies like SpaceX, OpenAI, and Anthropic have remained private for so long. And third, what history teaches us about the largest IPOs ever. And finally, the one major shift happening in the markets that may be more important than any single IPO we could talk about. Let's start with what's happening right now. Most people assume companies grow for a few years, then they go public, and then they become giants. But that used to be much closer to reality, but today, companies become giants before they ever go public. It's a little bit different. Think about that for a second. OpenAI has a reported value of roughly $852 billion. And then you got Anthropic. They're reportedly approaching a valuation of roughly $965 billion. And now you got SpaceX. SpaceX is appearing to move toward a public market offering. Folks, these aren't small startups. These are some of the most valuable private companies in the world, yet most investors still can't buy shares through traditional brokerage accounts. Why? Because the way companies raise money, it's changed. Instead of going public early like they used to, many companies now raise enormous amounts of capital from venture capital firms, private equity firms, and institutional investors, and also sovereign wealth funds. That allows them to remain private for a lot longer, giving them more control than previous generations of companies. And this is where the story gets super interesting. The question isn't whether SpaceX goes public. The bigger question is why companies can now become global giants before they ever ring the opening bell. History doesn't repeat perfectly, but it often rhymes. You've heard that before. Let's go back for a minute. Microsoft went public in 1986. Amazon followed in 1997. Then there was Google in 2004, Facebook in 2012, Alibaba in 2014, Saudi Aramco in 2019. Each of these IPOs represented more than just a company raising money. They represented major economic shifts. Think about it. The rise of personal computing, the rise of the internet, the rise of social media, global e-commerce, energy. And now many investors are asking whether artificial intelligence and commercial space represent the next big wave. Now, here's the number worth paying attention to. Some of the largest IPOs in history raised tens of billions of dollars in a single offering. Let's name some of them. Saudi Aramco, the energy company. Alibaba, the e-commerce company. SoftBank, Visa, General Motors. These weren't just company milestones. They were major market events. And every major innovation cycle tends to produce a handful of these companies that capture enormous amounts of investor attention. I mean, it's always in the headlines. The real question is whether we're witnessing the beginning of another one. Let's look at 2 possible interpretations of this. Scenario A, capital markets are reopening. Investors, they're becoming more willing to fund long-term innovation. Things like artificial intelligence, commercial space exploration, advanced infrastructure, Under this view, mega IPOs represent optimism in its truest form. What investors are seeking and what they really want is exposure. Exposure to this transformative technology that they don't even really understand, but they're excited about it. And then let's look at scenario B. The story isn't optimism. The story is actually maturity. Private investors have spent years funding these companies. They've taken them through the intro stages, the beginning stages, and valuations have risen dramatically. Eventually, early investors and employees, well, they want liquidity. They want their money back with a reward. And under this scenario, the IPOs are simply the next stage of the company's life cycle. Now, which scenario is correct is a question you should be asking, but the answer, nobody really knows. And both could be happening at the exact same time. I think that's why it's important to focus on the facts rather than predictions. Because the facts, well, they're interesting enough. Everyone is focused on whether SpaceX goes public, but the real story is what happened before the IPO. Let me show you what I mean by that. Most people think an IPO creates a giant company. Increasingly, that is just not the truth. Take Saudi Aramco, one of the largest IPOs in history, but the most important number wasn't the money they raised during the IPO. The company itself, well, it was already worth nearly $2 trillion. Think about that for a second. The IPO didn't create a giant, the giant already existed. And that is exactly what we're seeing today with these companies like OpenAI, Anthropic, SpaceX. These companies reached extraordinary valuations before most investors even had any access to them. And at the same exact time, the number of publicly traded companies in America has declined significantly from the levels we saw back in the late 1990s. There's more investing, there's more capital, there's more technology, yet there's just fewer public companies. And the answer, or really the question of why, is what you should be focused on. And that's because more growth is happening in the private markets. Again, venture capital, private equities, institutional investors, and sovereign wealth funds, all providing capital way before the company ever reaches Wall Street. Folks, that is the real story. The biggest shift isn't the IPO. The biggest shift is how much growth happens before a company goes to IPO. And that might be one of the most important changes in investing over the last 30 years. Before we wrap up today, I wanted to give you a few things that are worth watching this week. Number one, the upcoming inflation reports, including the CPI and the PPI. The other thing you should look at is this week's ISM manufacturing numbers. They came in above expectations. The number was 54 versus 53, which was expected. 54 is the highest number in 4 years, and this was largely driven in part by AI investing. Additionally, supply chains are being disrupted. This is not new news. The Strait of Hormuz has been closed or restricted, which is driving prices up on manufacturing and also driving inflation numbers up. Another thing to look at is the treasury auctions, because those are going to be one of the things that are going to influence interest rates into the future, or at least near term. Additionally, you should be watching developments in AI infrastructure spending, and of course, any new announcements related to major IPO activity. Now, none of these events are going to tell us the future, but I will say they do provide clues about the environment these companies may be entering, and it's definitely worth paying attention to. What's your take on all of this? I'd genuinely be interested to hear your perspective, so down in the comments, let me know what your thoughts are. And if you found this episode helpful, make sure you like this video and also subscribe to this channel. Every single week, we break down current economic events, market trends, and historical patterns to help you make more informed financial decisions during uncertain times. Thanks again for joining me on this episode of Straight Talk. And with that being said, I'll see you next week.